but that divergence there was enough for me to look at this liquidity as a raid, especially if we run a short-term high, right? This short-term high right there, we run through it there, that candle. So we have technically a shift in market structure that's bullish. Now, a shift in market structure, this is for your notes. A market structure shift is just a short-term change in market sentiment, and it will deliver on a short-term basis. A market structure break is where the entire tide of the marketplace changes and we go into a longer, higher time frame delivery of price, where if it's been bullish and then we have a break in market structure that's bearish, then what we're saying is there's a change in trend, if you want to call it in retail logic. A shift in market structure is not equivalent to an outright reversal. It's just a change in short-term market sentiment. And that's all we need to capitalize on in terms of intraday price action. So when we see the short-term high changing here, right there, that candle, once it passes through it, I never, this is for your notes also, a shift in market structure does not require a higher close above the short-term high. It just needs to trade above it. The algorithm is not basing its next run on price because it closes above that. It just needs to run through it. Once it does that, that trigger now starts a macro. A macro is a short list of instructions that the algorithm will run, and the price engine that creates these fluctuations in price. It matters not how much buying and selling pressure. That's a misnomer. It's a lie. So once we get below the sell side here, we run through this short-term high. There's a shift in market structure. Now it's bullish. So your eye goes to what? My eye goes to where's liquidity. So the first thing I want to look for as I pan back is I want to look for, is there a relative equal high, something smooth? These highs are basically almost the same, right? Retail thinks that's the highest it can go because that's what the books tell them. They say in their mind, okay, this is the highest it can go because that's resistance. It's going there and going above it because that's exactly where the money's resting. That's where the victims are holding up signs. When the market trades down to the sell side here, and then I'm watching, does it shift bullishly? There's a shift in market structure with that candle right there. It does not need to close above it. So now in my mind, I go back through what just took place. Well, we just ran sell side. We have SMT divergence. If I'm anticipating the likelihood of something bullish, I'm already expecting the SMT. I'm not using the divergence as a trade selection. It's a confirmation tool. It qualifies something that I had already anticipated.